Hello everyone, I'm Bhavna Sharma, Assistant Professor, Department of Commerce, Gemtech Greater Noida. I welcome you to the lecture series of Financial Accounting. Today we are going to discuss the rules of accounts and journal. Now there are three types of accounts: personal account, real account, and nominal account, on which the accounting recording of the transactions is based. So first type of account is personal account. So like the name suggests that it includes the accounts of a person with whom the business deals. So in personal account, there can be three types of accounts: natural personal account, artificial personal account, and representative personal account. Natural personal account means the living beings, persons like the suppliers or creditors, investors. Artificial personal accounts means the company. It can be a private company, a corporate body, an institution, insurance company, etc. Then representative personal account, it represents a group of people, like group of persons, salary account. So whenever these kind of natural or artificial person is there in the accounting, then the rule will be debit the receiver and credit the giver. So whosoever is receiving would be written on the debit side, and whosoever would be giving will be mentioned in the credit side. Second type of account is real account. So in real account, we have two types of accounts: tangible real account and intangible real account. Tangible real account means which can be touched or felt, like the cash, building, furniture, plant, machinery. An intangible real account means which cannot be touched, like goodwill, patents, copyright, trademarks. So, for tangible and intangible assets, the rule is debit what comes in and credit what goes out. So, if any asset is coming, it will be debited, and if any asset is going out of the organization, it is being sold, then it will be mentioned in the credit side. Then third one is the nominal account. Nominal account includes all the expenses, losses, incomes, as well as gains. So any rent paid or rent received, insurance paid, dividend paid, received. So any kind of income or expense would be included in the nominal account. So the rule is debit all expenses and losses and credit all incomes and gains. Next, we'll discuss the accounting equation. The accounting equation is that assets is equal to liabilities plus capital. So, all the assets would be equal to the liabilities, which includes the capital also. So, now we'll start with the journal. Now, a journal is that book of accounts where the accounting entries are recorded for the very first time. So a journal gives a complete record of each transaction in one place. So the transaction is recorded in chronological order and as per the rules that we have just discussed, depends on the personal, nominal or real account. So it shows the debit and credit balance of each transaction. And the process of recording the transaction in the books of journal is known as journalizing. So every company uses a general journal. It can be used to record any transaction, and it includes first date of transaction has to be mentioned, then the title of the accounts, then amount of the debit and credit balance, and the explanation of the transaction. So this is the example of how every transaction will be recorded in the books of journal. So like first, the capital is received by the owner, which is 3 lakh. So capital is being received. So that means what is receiving debit, what comes in, that is cash. Cash is coming. To capital is the liability that is being given by the owner. So the entry would be cash account debit to capital account and 3 lakh on both the sides. Now next entry is purchase raw material for cash. So what is coming? Raw material, that is, we mentioned purchases whenever any goods or stock is coming. So purchases account debit to what is going out? Raw material has been purchased for cash. So cash is going out. So that means purchase account debit to cash account for 25. Next, third entry was on 6th, purchased equipment for cash 50,000. So equipment has been purchased. So debit what comes in? Equipment account debit to cash account for 50,000. So this type of format we make. First we mention the date, then we mention the particulars column. This is the ledger folio column. So now after this, the entries would be posted into ledger books. So whatever entries posted in which page would be mentioned here. Then the debit and credit column. So every transaction, the debit and credit column would be equal. Now 10th transaction is goods purchased on credit. Now again, something is being purchased, so purchase account debit to. Now here, goods have been purchased on credit basis, so to creditors 3,000. On 13, payment of wages for 2,000. So what is wages? Wages has been paid. That means wages is an expense. So debit all expense endorsed. So wages account to cash account, that is for 2,000. Now on 15th, rent has been paid 6,500. So again, rent is an expense in this case. So rent to cash 6,500 on both the sides. Interest received for 3,200. Now here interest is being received, so interest is the income. So credit on income and gains. To interest, what is being received? Interest is being received in the form of cash or bank. So cash account debit to interest account for 3,300. And here we write whatever the explanation for the transaction is, being capital received from owner, being the interest is being paid. So next entry is machinery sold. So machinery has been sold, that means machinery is going out of the organization. Credit what goes out, and machinery is being sold, so the company must have received some cash for that. So the journal entry would be cash account debit to machinery account for 50,000. Next is paid to Suresh. Now here Suresh is being paid. So Suresh is the receiver, debit the receiver. And payment has been made. So credit what goes out to cash. Suresh account debit to cash account for 7,000. And last entry is deposited into bank rupees 2,000. So cash has been deposited. So cash is going out of the organization and it is being deposited into bank. That means bank balance is being increased. So debit what comes in and credit what goes out. Bank account debit to cash account for. So likewise, we can do all the entries or all the transactions can be recorded in the books of accounts. Thank you. That's all for